Today's webinar, of course, will be about how to navigate the earnings season using investing pro tips to maximize your portfolio during what can be a challenging period for investors, both new and experienced. So obviously a little bit something over here to hopefully get you in the right mood as Q4 earnings season kicks off. Just make sure everyone can see the presentation. Yes or no? I might be sharing the wrong screen. Hold on one second. All right, there we go. There we go. Looks like we have the right window now. I think everyone can see. Q4 earnings season kicked off on Friday with the major banks reporting their results. We saw JP Morgan report its highest quarterly profit on record. Still, the stock ended lower in negative territory. So like I said, obviously a challenging period. You're not sure what to react to. Once the first numbers come out, obviously the algos take over, but deep down, once you do the digging, the picture gets clearer, and what we saw is net income margins come down over at JP Morgan, and obviously Jamie Dimon did sound cautious regarding the outlook for the months ahead. For this week, we have a few more banks reporting, Goldman Sachs and Morgan Stanley, but the fun really begins next week when Tesla and Netflix report their results, and the final week of the month, of course, sees the mega cap group of tech stocks, the FANG names, report their quarterly numbers. So obviously a lot to look forward to in the coming weeks. Obviously one of the for those who enjoy the volatility, it's one of those times in the market where many opportunities arise. So before we get started and really kick things off, my name is Jesse Cohen. I am a senior financial analyst here at Investing.com. Been with the company since 2010, so just about 14 years. Very exciting times, obviously, to be in the market over the past decade. And obviously what we have going forward will really dictate the direction of the market for the coming weeks. I'm active on Twitter, so reach out to me, Jesse Cohen, INV, or you can also email me at jesse@investing.com with any thoughts or comments you might have. So the agenda for today, first, obviously, I'll introduce ProTips, what it is exactly, and then we'll just jump right into it, how to use it to find earnings winners. We'll then highlight a few more features and benefits. I'll also have some time to do a little short live demo of ProTips in action. So if you have any stocks in mind, you can write that down for me in the questions box, and we can highlight those during the live demo. And then, of course, as a token of appreciation for all you joining, taking time out of your busy day to join me in today's webinar, we have an exclusive gift offer from Investing.com for you to take advantage of on your Investing Pro subscription. And then, of course, at the end, also have some time for audience questions. So again, write those in the question box during the presentation. And then at the end, I'll review it, and we'll go over some of those as well. So what is ProTips? ProTips, obviously, over at Investing.com, part of the ongoing journey to level the playing field between retail investors and the market pros, the large institutional investors, the hedge funds. It's always been about leveling the playing field, and ProTips is the latest feature in that journey. So what it is exactly, it provides investors with quick, bite-sized, summarized information to help you make better investment decisions by classifying both positive and negative headwinds for which each stock has going for it. So pretty much, it's a cheat sheet for the market. I'll obviously provide further examples, but what it is, designed for the retail investors, professional traders alike. It's all about leveling the playing field and obviously using this service to maximize your investment potential. So this is an example pretty much right here. What we see is a stock with overall positive pro tips over here, yields high return on invested capital, has raised its dividend for 18 years in a row. Analysts are bullish on the company's earning prospects, and it operates with a high return on assets. With that being said, I see that the RSI, which is the Relative Strength Index, a technical indicator pretty much, which provides some relevance whether the stock is overbought or oversold. So the RSI over here is telling me that the stock is in overbought territory. So pretty much what we have over here is overall a generally bullish picture. However, perhaps I would wait for the stock to pull back in order for me to make a purchase or consider buying and adding it to my portfolio. So Investing Pro, obviously, if you're a subscriber, this new feature is available to you immediately. The feature is live, and what we have, going for in the coming 30 to 45 minutes is, of course, I'll show you how to use it to your advantage during this earnings season. So again, if you're a pro subscriber, you can just log in and have that available for you immediately. So having that in mind, we have John Smith. John is a 40-year-old electric engineer living in Philadelphia. He's married. He's got 2 kids. Busy day, working hard during the day, coming back home, and he's got to spend time with the kids and the family. We love doing it, but that can be draining and exhausting. With that being said, John wants to invest in the stock market. He has a couple friends down at the gym that are telling him about all these, hot stocks, and they're making, good returns in the market. So John wants to get in on the action as well. However, he doesn't have the time to go through all the information. Once he does sit down at his computer and starts doing some research, he's just overwhelmed with all the information he has to analyze, going to different websites in order to obtain all this information. So John, out of frustration, he just shuts down the laptop, heads over to the living room, turns on the TV and watches the game or whatever's on at that moment. And unfortunately for John, he misses out on some pretty good opportunities to invest in the market and see some positive returns. So what John needs pretty much is a tool like ProTips that can help him make money or save money pretty much in the stock market with these bite-sized informational observations, pretty much what you need to know about the company without doing all the work. So keeping that in mind, John, he heard about Tesla. His neighbor he's been investing in Tesla for 2-3 years, and obviously he's seen some positive returns during that period. And they got earnings coming up January 24. That is next week, next Wednesday. Obviously one of the leading stocks in the market, and John wants to kind of test the waters, see if he should invest in Tesla heading into the earnings print. So of course, John pulls up Investing Pro, and immediately in the company profile page, he'll see the pro tips for that specific company. So what John sees over here on the Tesla company profile page is that the company is forecast to be profitable this year. Obviously, it's a prominent player in the automobiles industry, and it holds more cash than debt on its balance sheet, something which up until a few quarters ago was not a tailwind that Tesla had going for it. However, Tesla is trading at a high earnings multiple, and stock price movements can be quite volatile. So obviously, keeping that in mind, maybe Tesla, not for the faint of heart, especially if you're new investor, inexperienced, jumping into the waters with Tesla, which is already trading at a high earnings multiple. We did see it break below key support levels earlier or late last week. So looking at what I see over here, the summary from ProTips, sorry for that. Perhaps I should wait on Tesla moving forward. Obviously, it's a great stock, and I will keep it on my watch list. I can add it to my watch list right there on the top right part of the screen, and I can monitor it going forward. Now, I will say that ProTips, these tidbits over here that we see, they're updated daily. So whatever market trend that we see in the market, if things are changing or shifting, it adapts to that immediately, using AI algorithms, using years and years upon of financial data history. So obviously there's a lot of back testing going on with that. So Tesla right now, in my opinion, is a pass, especially when it's trading at these vulnerable chart levels heading into earnings. Caterpillar is another stock. John, his brother, works at a mining company over in Ohio, and he told him that his company just bought a bunch of new Caterpillar trucks. Sales are skyrocketing. It's a positive sign going forward. And John might want to get in on the action on Caterpillar as it reports its earnings at the end of this month on January 30. It's the largest manufacturer of construction equipment in the world. So obviously a well-known stock with a lot of positives going for it. And as we can see here in the company profile page, I see just a sea of green, if you will, positive headwinds. Obviously Investing Pro, as we've seen with these couple of examples, ProTips classifies these insights, either highlighting them in green or red, in order for you to really, just make it easier on the user, performs all the due diligence on the stock in a matter of seconds, something which would have taken John, a couple of hours without ProTips. He has right here at the power of his fingertips. So looking at Caterpillar, company's been raising its dividend for over a decade, trades at a low PE ratio. It's a big player in its field. The analysts predict the company will be profitable this year with a record profits even forecasted. And obviously it's been performing well over the past 10 years. And very interestingly, I see that the company has a perfect Piotrowski score of 9. Now, John doesn't exactly know what that is as a novice investor. So ProTips, what you can do is you just click on the highlighted field or the highlighted factor over there, and immediately it redirects you to a page where not only does it provide the definition, it also provides the historical context of Caterpillar's benchmark score against the main competitors in its field. It also provides a nice little summary of the history of Caterpillar over the past 10 years. So I see the Piotrowski score hit a 5-year low in December 2019 when it fell to 5. However, ever since, the company has been making all the right moves, cutting costs. Sales have been increasing, and it now has reached a score of 9. Now, Deere, of course, Deere is another big player in the field, one of Caterpillar's biggest competitors. And I can see that Deere here has a Piotrowski score of 7. So automatically, it also provides comparisons against the major industry peers and whether perhaps another player in the sector could be a better bet. But even according to this, Caterpillar seems like the stock to own in the industrials sector, especially heading into earnings. So obviously a lot to like with Caterpillar, many tailwinds and future growth prospects for Caterpillar look strong. As such, I recommend buying the stock. It looks like a buy heading into earnings. So just to kind of make things easier here with ProTip, the features, what we saw is it summarizes complex data in a matter of seconds. It prioritizes those key insights by using market trends, back testing, AI algorithms, and 25 years of historical financial data. It then classifies those insights as bullish or bearish. So immediately, you don't have to do even, that much work anyways, because Investing Pro Tips does all the work for you. So if all that at the end provides contextual information for each and why each insight matters, you can click and highlight on each one and get the historical data and get the comparison against all the market peers. So obviously, all those factors should help you make better investment decisions. Now, of course, like I mentioned earlier, the power behind ProTips is by utilizing over 25 years of historical financial data like balance sheets, income statements, cash flow, and more market trends in order to identify, where the stock is going. So you don't have to do all that work, all that due diligence, going to the company website, pulling up the 13F, pulling up the balance sheet, going through all that stuff. Investing Pro Tips does all that for you. It then, of course, uses AI to identify shifting market trends, providing peer comparison against all the other industry players in the market, and as well as performing back testing against the S&P 500 and other major industry benchmarks. Now, Coinbase, of course, has been in the news lately. The spot Bitcoin ETF got approved late last week. Everyone was expecting a major boom. However, it proved to be a buy the rumor, sell the news event, with Bitcoin pulling back slightly from those 2-year highs, close to $50,000. And Coinbase, of course, has been in the news. He saw a piece on it. He overheard a conversation on the train on the way to work about this guy bought Coinbase, and he's been performing, and the stock has been performing well for him. So the biggest cryptocurrency exchange, or one of the biggest platforms in the industry, Coinbase, looking for, pulling up the Pro Tips page for Coinbase, there's not much to like, to be honest. I see a lot of bearish headwinds, which could hit the stock. Obviously, we did see a pullback last week in a reaction to the spot Bitcoin ETF approval. So price movements have been quite volatile lately, both to the upside and to the downside, to be honest. Analysts do not expect the company to be profitable this year, which is a major red flag, especially in the current environment of high interest rates. The company has not been profitable, and it trades at a high price to book multiple. So taking all that into consideration, Coinbase appears to be a highly speculative name. Not in terms of the fundamentals, there might be future growth prospects there, which make Coinbase a long-term investment at the moment. However, for John, heading into earnings, Coinbase, which reports on February 1, perhaps is a pass at this point, especially as the market reacts to shifting developments in the cryptocurrency market, with the Bitcoin ETFs and where things go forward. Perhaps, BlackRock taking a bigger stake of the pie of the crypto industry could hurt Coinbase going forward. So ProTips takes a lot of that into account. And the conclusion that we see here is, a lot of red flags, a lot of red. Not much more to say about Coinbase, except, add it to the watch list and, keep monitoring it as the crypto market evolves. Chevron, hold on one second. Got my Investing.com cup here, drinking some tea. There we go. So Chevron, of course, has been in the news. Oil prices are reacting to fresh disruptions in the Red Sea region. The U.S. has been leading airstrikes against Houthi rebels in the area, which have been attacking shipping transit lanes. So pretty much oil prices are reacting now, especially now that fears over a broader regional conflict in the Middle East are brewing as well. There's been obviously a lot of drama in the region in the past few months, and things are probably not likely to cool any, in the months ahead. So that has been many to speculate that oil prices could reach back to $100, and that of course could be a boom to Chevron, which reports earnings on February 2nd. Besides ExxonMobil, I believe Chevron is the second biggest oil producer in the U.S., in the world, I think, for that matter. No, I haven't. Besides Saudi Aramco, of course, which leads the field in that industry. But looking at Chevron, the company has raised its dividend for 36 consecutive years. So obviously, it has proven that the company can weather shifting economic environments and still provide investors with higher dividend payouts over the years. Stock generally trades with low price volatility. It's a big player in its field. Cash flows are robust and strong, especially at these levels, that they can cover interest rate payments. However, heading into earnings, analysts appear to be revising their estimates downwards for the upcoming period. Now, some context on that, of course, sometimes, with Chevron specifically in this case, they reported such strong earnings at this time last year that the comparisons can be difficult. With that being said, if ProTips says that the analysts are revising downwards for their earnings estimates for the coming period, perhaps that is something I should take into account. But overall, the green outweighs the red over here. Chevron's a big player in its field. So if oil prices do surge higher, I expect Chevron to be one of the main beneficiaries of the spike in oil. So of course, Chevron could be an interesting play, especially in the current geopolitical backdrop. So Chevron overall is a buy. So again, what we saw over here is how much time ProTips really saves John and myself, to be honest. I use ProTips in my own investment decisions. It can help easily identify risk and reward. So again, it can make you money or save you money by making some bad investment decisions. So obviously identifying and flagging those potential risks and reward is something which ProTips does very well. And at the end of the day, in making informed financial decisions, leveling the playing field with the professional traders, especially if you're a small retail trader. So again, having these tools at your disposal can definitely help you make those informed and smart financial decisions. And really, Investing Pro does all the work for you. All due diligence, pretty much the research behind those decisions. ProTips does a lot of it. And not only does it cover all stocks in the U.S. stock market, it provides coverage on over 135,000 global stocks. So whether it be in Europe, in Asia, emerging and market economies, in Africa and South America, developed markets as well. And as part of the ongoing journey to continue to improve, Investing ProTips will expand its coverage to more and more markets as the months go on in 2024. Of course, a lot to like in terms of that. So the full coverage in terms of that, Shopify is a Canadian company, which of course trades on the New York Stock Exchange, but also has shares trading on the Toronto Stock Exchange. It's been a major player in the e-commerce field. Shopify kind of rose to fame during the COVID pandemic when really it scored, triple-digit gains during that period. Shares have come back down to earth in recent months, but the stock has been a strong performer. And pulling up, Investing ProTips for Shopify, what I see over here is, obviously it's a prominent player in its field. liquid assets exceed short-term obligations. So cash flow levels have been improving for Shopify, which was once non-profitable, but obviously has made all the right moves in recent years. And analysts predict the company will be profitable yet again this year. It still does not pay a dividend to shareholders. Shopify is still in growth mode. So some of those tech stocks, will not provide interest or dividend payout to shareholders, instead opting to reinvest the money back into the company. So again, a couple of red flags here. Stock price movements are volatile, as are in many growth stocks. And the company is trading at a high revenue valuation multiple. So the question is all about, how much can the market continue discounting these valuation multiples for high growth tech stocks? We did see a lot of those names, punished in 2022 as a result of the Fed's aggressive rate hiking cycle. But now that expectations are for future rate cuts, many of those high growth tech stocks made impressive rebounds in 2023, and so far the trend has continued in the first couple weeks of 2024, with AI related names and tech names continuing to perform well. So Shopify, in my opinion, is definitely one to keep an eye on. If you're Canadian, you're obviously familiar with the company, and I believe it is Canada's biggest company. So obviously, a lot to like there with Shopify in terms of the fundamentals. Right now, the outlook for the stock does seem a little bit rocky with the high valuation multiples, but it is up 121% over the past year. So wouldn't be surprised if we do see a pullback in the coming few weeks. But again, add it to your watch list. Keep monitoring the pro tips and see how that evolves on Shopify. And if valuations come back down to earth by even a little bit more, it would definitely be worth adding. Continuing the coverage of global companies, we're talking about NIO right now, the Chinese electric vehicle maker, which reports earnings on March 5. So again, a little further out than the U.S. companies. So again, in terms of what NIO has going for it, it's one of the major players in one of the biggest EV markets in the world. Obviously, with that being said, price wars in China and in the U.S., of course, led by Tesla, have hurt margins over at NIO, and the company is definitely seeing, some negative impact as a result of those price wars. And pulling up the investing pro tips, I'm not surprised. But if, John, for example, which we highlighted earlier, he's not familiar with NIO. He saw a commercial for NIO or, online, and he wanted to do some research. So immediately, all these red flags pop out. Valuation implies poor free cash flow, suffers from weak gross profit margins. Stock is taking a big hit, obviously, if you take a look at the chart over there on the left side of the screen. And this is just over the past year. If we were to pull out 5 years, the company peaked over at $60 in early 2021 and currently trades at under $10. So obviously, NIO has taken a hit, and yet it still trades at high earnings multiples and valuation multiples. So in terms of that, NIO is a non-consideration, in my opinion. Non-investable, especially that it is based in China, which I'm kind of hesitant to invest in any of those China-related names. Just because of the investment structure in the country can negatively impact investors in a manner which what are you going to do if the Chinese government wants to start going after the major tech players like we saw in 2022. So again, in terms of that, NIO right now, probably not a name I would want to hold, especially heading into earnings. Seems like there's more pain in store for the stock. Now, one of the biggest features for me, at least with Investing Pro Tips, is that I can access it anywhere. Whether I'm sitting at my desk at home or at the coffee shop, pulling out my laptop and want to do some work, or if I'm on the go, obviously I have it on my phone, have it on my Investing.com app. So definitely, all this is accessible on the mobile, on the web version, as well as the app. Provides all the classification of insights, the contextualized information, the market moving analytics, and the bullish and bearish insights, whether you're on the app on the go or on at home on the web. All that is at the disposal of your fingertips. And really, all this really is part of the ongoing journey to make the playing field more level for the retail investors. We got a lot to go up against. So now that we kind of went over that, let's do a little short live demo of Pro Tips in action. Let me share my screen right here and pull up some questions or see if we do have any. Okay, NVIDIA. I see NVIDIA over here, obviously, big name. Can everybody see my screen? Okay, very well. So if I'm pulling up NVIDIA right now, obviously one of the biggest names in the market, led the AI boom, the AI poster child, if you will. Investing Pro Tips right now. Let me see what the verdict pulls up. All right. So basically, what I have over here is that the company surprisingly has a perfect Piotrowski score of 9. Net income is expected to grow this year. However, RSI suggests the stock is in overbought territory. Now, like I said earlier, if I'm not sure what any of these mean, or if I want to get any further information, I can just highlight on the headwind or tailwind, the factor over there, and I get the information right now on the relative strength index for NVIDIA. Where it is in comparison to other names in the sector. So I can see that it is higher than Intel's right now at the moment, but still well below. Oh, I'm sorry. This is the information technology sector. So NVIDIA is trading well above that by a wide margin, even above Microsoft, AMD, Qualcomm, Texas Instruments. Intel obviously right now over here is actually flagging a positive value, RSI index. So, one of the beautiful, it's kind of like going down the rabbit hole, if you will. So I started, I wanted to go check in on NVIDIA over here, but I see the RSI is so high right now. It is pointing towards a pullback. However, Intel, is trading at a very attractive level. And if I were to pull up on Intel and get the Investing Pro Tips on Intel, obviously, it can just provide more and more investment opportunities. So looking at Intel right now, obviously high return over the last year, enjoying a turnaround story, a company which up until a few years ago, AMD was eating it for lunch, was losing market share to all the other major players in its field. And many were questioning, whether Intel even had a history going, a future going forward. But if we take a look at the stock performance over the past year, a beautiful recovery story going from around 27 to current levels at about 50. So obviously more than doubling itself over the past year, up 62%. And again, pulling back over the 5-year period, I did, this is what we were talking about over here when Intel bottomed over at 26. There are a lot of fears regarding, Intel going forward. But with that being said, it's still maintained its dividend for 32 consecutive years. It's a prominent player in its field. And, despite all the gloomy market predictions, Intel is probably not going anywhere anytime soon. Now, if I want to pull up the earnings page over here, the company does report earnings. on January 25. So that is about 10 days away. I see that EPS revisions, we do see 31 to the upside, only 2 to the downside. The stock price movement on earnings day over past few quarters have been positive. It surged over 8% in late October, up 7% in late July after the Q2 numbers, and the Q1 numbers in April saw it jump over 7%. So there has been kind of a positive shift in the character of the stock in terms of stock price reactions after earnings. Because if I do go further back in the history, you can see just every earnings day reaction saw investors sell Intel, by 9%, 10%, 9%. So we do see that kind of shifting with the company. So again, one of the helpful features of Investing Pro is seeing this contextualized information without, of course, having to pull up the historical price reaction for Intel and any other stock for that matter on earnings day. So again, in my opinion, Intel right now could be a better bet than NVIDIA, especially at current valuations. Let me see, do we have any, how about looking at CRISPR Therapeutics, a well-known genomic player. CRISPR is one of those high growth tech stocks, if you will, a biotech stock. So it should trade at, high valuations. And what we see right here, it does hold more cash than debt on its balance sheet. Analysts anticipate sales growth in the current year, but we do see some red flags trading at high revenue valuation multiples. Strong price movements can be volatile, and it suffers from weak gross profit margins. Taking into account the Investing Pro fair value price target, it implies 32% downside from current levels. Now, of course, this takes into account about 6 models that Investing Pro takes into account. Several models, which include both PE ratios and sales growth prospects, in order to determine the fair value price target. So that implies 32% downside going forward. Who asked that question? It was Pulaski. So Pulaski, I hope this answers your question and what we see over here. If I were to pull up the earnings tab on CRISPR, it reports earnings. When is the next report coming up? We do see some nice spikes over there in recent quarters. So earnings are coming up February 13, and all EPS revisions have been to the upside. That's a nice sign, obviously, when all 18 to the upside, 0 downward revisions, and in addition, taking that into account, the change reflects over 100% upside in the EPS estimate. So, CRISPR right now, something, a lot of positives going for that stock. We do see year-over-year growth anticipated for the current quarter of 67%. Looking at the historical data provided by Investing Pro, it has beaten EPS estimates for the most part over the past 4 quarters, but it has missed on revenue. Taking that into account, I mean, for the most part, I would definitely add this stock to my watch list. I don't know if I'd invest going into earnings despite all the upward EPS revisions. I would definitely do some more digging around regarding this company. And you can see right now, it allows me to easily compare the performance of the stock against other major players, whether it be the price performance history, valuation benchmarks, as well as a nice little summary here at the bottom. So basically all the other major players in its field. And again, overall, the fair value label is overvalued, despite analysts pointing to upside. So overall, I mean, it seems like there's it's an interesting story to continue to do some due diligence, some research. For the most part, what I see regarding CRISPR, it's thank you Pulaski for pulling up this on our radar. I think that this is a stock which I think we should all perhaps take a look at in the weeks ahead. Let me see, is there a version for the UK securities? Let's pull up, for example, see if Barclays, one of the big UK banks, obviously. So this is the US traded stock of Barclays, which trades on the New York Stock Exchange as well as the London Stock Exchange. And for the most part, it has raised its dividend in the past 3 years, trades at a low price to book multiple. Company is posting some nice profits. Fair value upside points to 27% upside in the next 12 months. The financial health for the most part is a 3. So that is 3 out of 5. That is above average. Pulling up the earnings page, the earnings tab for Barclays, they report next month. And for the most part, we do see some negative earnings day reaction for the stock in the past quarters. So yeah, I mean, I'm kind of hesitant. I wouldn't invest in many banks. JP Morgan probably is the one exception. Goldman Sachs could be another one. All the other banks currently right now facing headwinds or tailwinds, of course, from the regional bank turmoil that we saw that we saw in 2023, which spread across to Europe and, of course, took Credit Suisse down. Pulling up UBS, which took control of Credit Suisse at the time. The fair value estimate points to 8% downside for current levels. Overall, like all the other major banks, suffers from weak gross profit margins. Net income is expected to drop this year, despite covering its dividend payout for 12 years. So again, if I were to compare that to JP Morgan Chase, the bank of Jamie Dimon, for the most part, raises dividend, trading at a low PE ratio relative to near-term growth. Earnings downside does imply a little bit, 6% downside. Not that bad, in my opinion. I would wait for the stock to kind of settle after the dust from the earnings that reported on Friday. Obviously, it's been up 23% over the past year. And the move that we saw since the October bottom has been, nothing short of impressive for a company the size of JP Morgan, and the business that it runs, to have this kind of a growth over the past, 3 months. It's been up 15%. So obviously, JP Morgan Chase has been performing solidly over the past few months and should probably continue to do so in 2024. Let me see if we have any other tips or requests. AMD, of course, AMD is another well-known tech stock. It's same industry, semiconductor player, same industry as NVIDIA. We're really, in my opinion, most of those stocks are in overbought territory. With that being said, net income is expected to grow this year. It's a big player in its field. For the most part, it seems like the story for many of these tech stocks are the same. The valuations have run up so high in the past 12 months that the fair value for AMD implies over 20% downside, back to about $115. It's currently trades at $146.50. So yeah, 3 months, it's up 38%. Just mind-blowing numbers. Pulling up the 1-year performance, more than doubling, up 104%. So the move in a lot of these tech stocks was definitely in late 2022, early 2023. Right now, perhaps everybody's waiting for the Fed to start cutting rates. But what if that doesn't happen? What if inflation proves to be stickier than expected, and interest rates then stay at elevated levels for longer than markets currently anticipate? That could see a reset in valuations, being that a lot of the gains that we saw in 2023 really were front running the Fed rate cuts. So with that being said, a lot of these tech stocks are due for a pullback, in my opinion. Eli Lilly. Let's check out Eli Lilly, the maker of Wegovy, along with Novo Nordisk. Changed the industry pretty much by selling its diabetes drug for weight loss purposes. And the stock in the past year has been, up 81%. For a company like Eli Lilly, 81% stock appreciation in 1 year is, just mind-boggling, and has been up since the start of the year. So RSI suggests the stock is in overbought territory. Try finding a stock not in overbought territory in this market, and it also trades at a high earnings multiple. But the market appears to be discounting that due to the future growth prospects related to the weight loss drug. And we see the company's been raising its dividend, and it is a major player in its field, obviously expected to post record profits in the current quarter. And really what we see over the past few quarters, it's scored a 16% gain in Q3 2023. I believe it was their best earnings day reaction on record at the time. So even though earnings estimates have been coming down over the past 3 months, the change is still to the upside. So earnings revisions are coming down, but they're only coming down because they were so high. So we're still expecting 10% growth, or those analysts are still expecting 10% growth in EPS. And again, providing all the health checks on Eli Lilly. I could pull up all the information here, strong prospects regarding profitability and growth. But again, the relative value really stands out as a red flag. Just trading at a higher earnings multiple and revenue sales outlook. But again, the market appears to be discounting that, and sometimes what is expensive today can be more expensive tomorrow. And Eli Lilly, for the most part, is we see it over here in red in comparison to the S&P 500 and the healthcare sector in general. So just the outperformance over here has been, nothing short of incredible for Eli Lilly, which is up almost 80% over the past 5 years, while the industry ETF benchmark is actually down 6% over the same time period. So again, Eli Lilly, if we compare it to Pfizer, Pfizer trades at a PE ratio of 15.5 and a forward PE ratio of 18.5, whereas Eli Lilly really, the comparison over here is, I don't even think it's, you just see the size of the divergence, trading at a PE ratio of 116 and a forward PE ratio of 96. So obviously, Eli Lilly will have to sell a lot of that weight loss drug to justify these valuations. Let me see, do we have any more requests over here? Let me see, I need Mercado Libre, yes, Melly, actually one of my favorite stocks. I took it for a nice ride in 2020, and it's always been on my radar. Major e-commerce player in South America, operating out of Uruguay, and so we see the global coverage for Investing ProTips, also covering Mercado Libre, and really, in my opinion, a solid name to own in the consumer discretionary sector. If you want to position yourself in growth in Latin America, Melly is probably the stock to do in order to really take advantage of the growing middle class in South America. And overall, what we see over here is ProTips, of course, likes the stock as well, highlighting many positives, whether it be impressive gross profit margins and an attractive valuation. Analysts predict the company to be profitable this year. Cash flow levels have been improving, and despite the downside anticipated by the Investing Pro fair value, solid financial health, above average score, 4 out of 5. Just incredible performance for the stock. Past 5 years, it's up 370%. And with that being said, we'll likely continue to see Mercado Libre appreciating in value. Let's see if we could pull up the earnings tab on Melli. They report next month, February 22nd. All EPS revisions have been to the upside to reflect 56% growth. So we look at the stock price reaction, the historical data, mostly general positive bullish reaction on earnings day, except for one negative close in the past 7 quarters, and that includes a 23% spike in late 2022. So overall, Mercado Libre, they come out with earnings, they like to come out with a bang, and we do see that with the stock price reaction. So investors, of course, are encouraged as well by these growth prospects. So thank you for asking on Melli. This is another one, probably add to the watch list and continue going forward. It's just that simple. I then have them all here at my watch list. Let me see. We have a few more minutes for a couple of more examples before we move over onto the BlackRock. Of course, BlackRock. BlackRock has been in the news lately, obviously leading the charge to approve the Bitcoin spot ETF on Wall Street. Larry Fink, the BlackRock CEO, he's become the biggest Bitcoin bull on Wall Street right now. And, taking a look at the stock, ProTips in general highlights many positive headwinds. Obviously, the company is the biggest asset manager in the world. So even without the spot Bitcoin ETFs, it was running an incredible operation, one of the best on Wall Street. And we do see the company has raised its dividend over the past 14 years. And we're talking about raising its dividend, not maintaining it. So increasing its annual dividend payout for 14 years running. It's been profitable. Analysts, of course, are bullish heading into earnings. I believe, BlackRock just reported on Friday, and results were better than expected, and the stock ended up 0.9%. So, it was a kind of a rough day on Friday. We did see many banks sell off. So the fact that BlackRock closed in positive territory was a generally bullish sign for the stock going forward. I can see that, if I pull up the comparison page for BlackRock and compare it against the other major asset managers, obviously it is trading at a bit higher of evaluation than the other banks, but in my opinion, well deserved. And even at 21.6, the PE ratio is still rather attractive. The health score for BlackRock, above average. Looking at the history over here, it's been trending above average for even the past 5 years. Pulling up the dividends tab, the payout history has been growing for 14 years running, dividend yield of 2.5%. So again, if you are looking, if you're an income-oriented investor, BlackRock in the financial sector is, one of the rock solid. BlackRock is rock solid. Definitely a name to own, especially as it leads the charge, with the spot Bitcoin ETFs and becoming a major player in that field as well. Okay, so let's have time for one more. Let's see. Hold on. We got a lot of requests over here, so thank you for that. Kintera Therapeutics. That's an interesting one. Was that KTRA? Not familiar with Kintera, but who asked that question? Very interesting name. Ranchik from, obviously, if you're a biotech investor, a lot of these companies, high risk, high reward, penny stock almost, what is it trading at? 14 cents at the moment. With that being said, I would not recommend buying Kintera, despite a fair value upside of 87%, according to Investing Pro. Pro tips over here is just a sea of red flags galore. Quickly burning through cash, suffers from weak gross profit margins. It's not profitable, so it's losing a lot of money. Valuation implies a poor free cash flow yield. So I didn't hear about this name up until 10-15 seconds ago, and immediately, no offense to anybody invested in this company, it would be a hard pass for me, a no thank you on Kintera Therapeutics. So again, if I didn't have a chance to go over all the requests here, I apologize for that. But time is running short, so let's go back and exclusive gift offer time. Again, a token of appreciation for all you joining and taking part and engaging in today's webinar. We have an exclusive gift offer on your Investing Pro subscription plan using coupon code ProTips24. You get an additional 10% off on top of the 50% off already being offered as part of the Investing Pro New Year's sale. I'll include the URL for all you to have that in the, where should I put it? Let me put it in the questions tab, and I can send that to all, right? Because I believe I just sent you all the link for the Investing Pro discount exclusive gift offer. Again, Pro Tips 24. They are telling me that it is a big case sensitive. Trying it out myself, it worked lowercase, but you try them both uppercase, lowercase, you should get the additional 10% off on the Pro Plus 2-year plan. Again, so here, basically over at the checkout page, it would be a little box for you to apply the coupon code. Just type in Pro Tips 24, apply that, you get your discount immediately, receive your discount, and start trading, start making wise investment decisions using Pro Tips, which is just part of the package. It's just the newest feature that we want to highlight. In addition to Pro Tips, you also get access to Pro Picks, which is Investing Pro's AI-powered stock picking service. You also get the power of the Investing Pro Stock Screener, which in my opinion, best in the industry. Yeah, pretty much a lot to like on that. All the information is in the URL I sent in the chat box over there, in the questions box. Again, this is recorded because I did see a couple of questions. This is recorded. You will receive a recording to your inbox using the email that you signed up with to register to the webinar. So in conclusion, I hope I showed you guys how Pro Tips can help busy professionals make wise investment decisions. It summarizes information in a quick and easy to read manner, takes into account the market moving analytics, which are ever changing, especially in 2024 with the current environment, whether it be on the geopolitical front or the monetary policy front. So taking all that into account, and in my opinion, the biggest feature is that it saves time. It saved me hours during a week. It's time I can spend doing other things. Spend time with the family, spend time on hobbies, going to the gym. So again, saves multiple hours during the week, and I use it in my daily trading routine. And at the end of the day, you make those informed investment decisions using ProTips, something which up until recent, which was only at the disposal of the major hedge funds and the big institutional investors. So again, trying to level the playing field so that the retail investor gains an edge in the market. So any questions or answers, or any questions, thoughts, topics? But obviously I did go through a lot of these during the webinar and the live demo, which of course many of you here are asking for more examples. Again, maybe we can have another webinar and just live demo this for you guys. Our user here in India is asking if there's a discount applied to India as well. Yes, of course, available in India. There are Indian stocks, of course, traded and covered in ProTips. Day trade, of course. If you're a day trader, ProTips is definitely a tool that you want to have at your disposal. Definitely helps easily identify stocks that you want to consider going into the session. And then, of course, as the session evolves, you could use it as part of your own system to, when to enter the stock, when to sell the stock. But definitely, either a day trader or a long-term investor, ProTips has something there for everyone. New, experienced, a rookie investor, an experienced investor. I think that everybody needs that extra edge in the market, and ProTips definitely answers that need. Let me see if we have any other questions. I think we should start wrapping this up. This did go a little bit over more than what I wanted to, but again, it was such a great session with many of you, and really informative, highly engaging. So thank you all for taking part in the webinar. What's that? The code comes. Oh, look. So actually, the link works and the code comes up pre-filled already. I did not know that. Thank you for notifying me. So again, you just type in or just hit the link. You get the code, the coupon code already applied in there for you to take advantage of and take part of that. David, thank you for the excellent webinar. Thank you, David. And thank you for putting CRISPR on to my radar. That was a great question. Definitely take that stock into consideration as the earnings season approaches. You will be able to find this webinar actually in your inbox. Simone here is asking, where will I be able to find the webinar? So again, that will be sent directly to your inbox, the one with the email that you signed up for with the webinar. Jocelyn is saying ProTips 24 should be in all case. All right, so again, like I said, it should come in pre-filled already, but again, uppercase, lowercase, it could be case sensitive, so try both versions and see if it works for you. So again, I think that's it for today. I did not see any more questions. Thank you all for taking part in today's webinar. Very highly engaging group. I had a lot of fun. Hopefully you guys can take something out of this and apply it in your trading strategies. And good luck, everybody. Happy earnings season, and take care. Stay warm this winter. Good luck.